watching out for is in terms of real estate. Property registrations in Mumbai have actually soared to a 13-month high and almost 11% year on year. Mahima brings us the lowdown on what's happened, and then we will be joined by Knight Frank as well to decode this. Mahima, over to you.
Right. So, Knight Frank has done a study on how Mumbai property registrations are taking place, and as you rightly mentioned, the Mumbai registrations are up 11% YOY, and over 1.41 lakh properties were sold in 2024. Moving on to how much stamp duty revenue generated, where it generated around 12,150 crore stamp duty, which was up 12% YOY. In terms of the December 24 outlook, well, December 24 recorded around 12,518 property registrations, which was up 2% YOY and 23% month on month. In terms of residential properties, it contributed to 80% of the total registrations, that is of the 12,518 number. In terms of the registrations and sales numbers YOY, in 2022 there were around 1.22 lakh registrations and versus that of 1.41 lakh in 2024. So there's a 11% growth YOY as compared to 2023, and 2022 had a 9% growth. 2023 was a slow year which saw 4% YOY growth, but 2024 has been a strong year growth where around 11% YOY sales registration growth was seen. Moving on to the category wise registration, there is growing inclination towards premium real estate is what the trend is being observed. There is shift in buyer preferences towards higher value segments, and growing preference for spacious homes is now taking place. So these are the three key trends that have been observed by Knight Frank in the report. In terms of the category mix, if we see the less than 50 lakh rupees in December 2023 was 30%, but it has come down to 25%. 50 lakhs to 1 crore was around 27%. It has remained at 27%. 1 crore to 2 crore was 25% of the total mix in 2023, but it is it's also remained around 25%. 2 to 5 crore was at 12%. It's gone to 16%, and 5 crore and above was around 6%. It's gone to around 7%. So there's a 1% hike in 7%, but there's a huge hike in the bracket of 2 crore to 5 crore, which has gone up from 12% to 16%. Moving on to the area-wise breakup, we're seeing that up to 500 square feet share in December was 51%, which has significantly gone down to 35%. 500 to 1,000 square feet, 2023 December was around 39%, which has gone up to 51%. So a significant jump there between 500 to 1,000 square feet. 1,000 to 2,000 square feet was around 8% in December 2023, which has gone up to 12%. So 4% gains here as well. And over 2,000 square feet has remained at the same level in terms of percentage as compared to 2023, that is around 2%. Moving on to how the things have panned out. Lastly, the conclusion of the Knight Frank report suggests that, and the trends and the study suggests that people are now shifting towards the premium bracket. The 5 to 8 crore bracket is picking up, and the square feet wise, 500 to 1,000 square feet area is something that people are buying more now in terms of Mumbai properties.
Thank you, Mahima, for getting us the details. In fact, let me get in the other Ghulam Zia, Senior Executive Director at Knight Frank, to join us to discuss more. Ghulam, welcome to the show. My first question coming to you is, registrations at a 13-year high, 11% growth is what you've already seen. Are you expecting new highs in 2025? And what's your expectation? What is the analysis actually saying?
Hi, first of all, thank you so much for elaborately discussing the report that we just released. The question about 25, you're talking about what kind of year are we looking forward to? Well, one thing which I must highlight over here is that while the existing trends that your colleague has just presented on the screen are showing a slowdown in the lower end of the market, and that was essentially because a couple of governmental policies have been changing. Earlier, we were under Pradhan Mantri Awas Yojana 1, PMAY 1. Now it has changed to PMAY 2, which happened last year. And in between, almost about a year and a half was lost, because in transition, a lot of policy matters were yet not clear. But today, with that segment also getting a huge support from Pradhan Mantri Awas Yojana, we are expecting the lower end of the market also to shoot up. And mind you, if you look at the sheer numbers, I'm talking about number of transactions alone. As she just explained, 85 or 86% of the transactions happen in that category, which is below 1,000 square feet apartments. The upper end is barely about 14 to 15%. So that is where the action we are expecting is to pick up. And already last month or so, we are looking at good amount of interest generated, good number of visits for mid to low end category apartments. One concern though is that last 3 years, not much of inventory has been launched in lowermost segment, and that can have an impact on the sales going forward. But that is one segment which we are very confident about growing in 2025. And the above two segment, even if they are remaining stable or stagnant where they are, overall, we are going to definitely look at a growth in the numbers, the annual numbers and month-on-month numbers. And that's exactly where the trend continues, and the number of transactions in Mumbai shall grow in the coming year as well.
Right. So overall, Gulam, what does this actually mean? Because growing preference towards higher ticket homes with more space, what would it mean for affordable housing? Because that was a segment that everyone was eyeing, and now we are talking about luxury. That clearly poses a question as to, from a stock market perspective, that which companies should one focus on, right? So what is it for the affordable housing space then?
Well, first of all, let me highlight that the major action happens in mid to upper end. The affordable housing segment, even if you launch multiple number of apartments, it doesn't add much to the revenues of your listed players. At least we're focusing on the players who are listed here. The listed players are not so much into affordable housing, barring 2 or 3 companies who do a lot of work in affordable housing. But if you talk about the top 2, 3 companies by way of revenue, one of them, DLF, launched one project which they are expecting a revenue associated from that single project to be about 35,000 crore, which is more than 40% of their annual turnover. Which means that the upper end is where you are selling faster and your revenues are coming in much faster. As long as that velocity of sale concern is tackled, you shall see huge movement in the upper end of the market. And the lower end, mid to lower end, shall remain where it is. As far as the listed players are concerned, I can't think of more than 2 or 3 players who are completely focusing on that segment of market. But as far as your focus is concerned, most of the players have actually in last 4 to 5 years moved from mid to upper end. Most of these developers, top 14, 15 developers, have actually moved into the luxury segment. And that is where the revenue growth has been fantastic. The profits are fabulous. And that, because even one apartment sold, especially talking about Mumbai and Gurgaon. In Gurgaon, DLF is talking about each apartment of 100 crore per apartment types. And in Mumbai, we do see about 50 to 100 crore apartment in abundance. And that sale is something which is adding huge numbers to the players who are in that market. And that perhaps explains why many of the developers from South have moved to Mumbai and Delhi, because they realize that these are the markets where the revenue surge is highest. In Bangalore, you can continue to be in the same market without showing more than 10-12% of growth in your revenues. But the moment you come to Mumbai, the sudden sales that you see in the upper end of the market adds tremendous value to your top line.
So Gulam, clearly, if you're talking about Mumbai alone, it's redevelopment which has become the key, and the projects that are coming up, you're looking at, ultra luxury projects, right? And to counter that, rental income is something, rental flats are scarce in demand. So how is the demand supply situation then panning out, number one? And how are you looking at the pricing and yields in Mumbai?
Okay, to start with, as far as residential segment is concerned, in this segment, people don't even talk about residential yields. It's not the rental market which drives that market, because in any case, it doesn't move beyond 4%. Like I would talk about Bangalore at least, where it was slightly higher in last year and a half or two. But otherwise, if you look at Mumbai and Delhi, you are close to 3% rental yield. And it doesn't make any sense to actually buy an apartment and put it on rental income alone. So it's actually, as far as real estate is concerned, the commercial real estate gives you far better rental yield, could be 6 to 7% and even beyond. But residential is not a segment which you look at as far as rental yields are concerned. Obviously, property price appreciation is something which also adds up to overall decision of buying an apartment. And that is where about 7-8%, 10% of growth per annum plus 3-4% of rental yield can give you a handsome return. But it's only during the course when the property cycle is on the upswing. The moment it stabilizes somewhere at 12 o'clock position, again you're in a fix. So if you look at the overall property clock, about 10 years of a property cycle, the return or the property price appreciations also are not going upwards of 5 to 6%, mostly related to inflation. And if you counter inflation, net you're not getting much in residential real estate as an investment opportunity, unless you're punting and looking at apartment which gives you a huge growth or jump in prices appreciation only in a year or two. Except for that, rental yield is not something which investors are happy about as far as Indian residential market is concerned.
Okay. And overall, if you see in terms of affordability goes, clearly Mumbai was the only city to exceed the affordability threshold as per your report, standing marginally higher at 50%. What would this mean in terms of where Mumbai stands versus other cities like Ahmedabad, Pune and Calcutta, which are on the other end of the spectrum in terms of affordability?
Look, Mumbai has always been the costliest city when it comes to apartments. And that is something which continues, although it has shrunk. If you look at last 10-year trend, or 10 to 12-year trend, you will realize that this 50% that you're talking about used to be almost 75 to 80% of your annual income used to go towards EMIs. Today, it has shrunk for two reasons. One, obviously, the wealth growth has happened a lot. Your affordable your pockets have been much deeper, and on the other side, price growth has not been as good. Of course, last year and a half or two, the prices have jumped up a little, but net the affordability has come to 50% after almost about 7-8 years, when it used to be about 70-75% plus. So Mumbai has been an exceptional city as far as affordability is concerned, but the other cities at the lower end, you spoke about Ahmedabad and so on, Calcutta, Ahmedabad, these are the places where it has been always very affordable to buy a home. Mumbai always has been extremely unaffordable.
So from here on, in terms of where overall pricing trends go, how do you see it moving specifically from a Bombay perspective, taking the demand supply into consideration across segments?
Okay, let's talk about new launches. I think earlier I was trying to explain the new launches have been very sparse, very rare in the mid to lower end, because everybody was focusing on mid to upper end. And that is where huge amount of supplies have come in. But if you look at the velocity of sales as well, every quarter, how many apartments these developers are selling in their projects, those numbers are still looking very good. In the upper end of the market, the uber luxury segment is fabulous, both in Mumbai and Delhi. In fact, these are only two cities where you see apartments which are valued more than 20 to 50 crores and etc. And that is a segment where it's not so worrisome. But the segment of 20 to 50 crore has seen huge number of inventory infusion in Mumbai especially, which means that their velocity of sales have been actually shooting up. And in times to come, we may see some bloodbath in that segment where huge number of inventory has come in. But as far as the mid to lower end and the super upper higher end is concerned, the velocity of sales are absolutely under control. And within a year or two, if you're selling the wares that you're creating, it's a very good situation to be in. But it's only the luxury segment alone, which is 20 to 50 crore segment in Mumbai, where we have seen last year and a half or two, a lot of inventory has come in, is where the problem is, where the concern would arise, and pricing would play accordingly. The upper end is where you could continue to see the prices rising. Lower end, possibly once you have the demand bouncing back on the back of Pradhan Mantri Awas Yojana schemes, you once again will see price rising. It's only that luxury segment, 20 to 50 crore apartment, is where we are concerned that the prices may remain stagnant, if not go down.
Right, so that's going to be an interesting trend to watch out for. Thank you, Gulam, so much for sharing the views and joining us on the show, because this gives us detailed insights as to what's on the cards from here on as well.